Hey, hello everyone, welcome to today's video. I'm Chris. Here's my coffee in the afternoon. It is, as you can see, 4 o'clock here in Chicago. Let's take a look at the markets. I don't have a lot to say. I did a, pretty longer video yesterday and talked about the longer term trends here, and I talked a bunch about Elliot Wave. So today we'll just kind of quickly focus on the price section here. We'll take a look at Bitcoin and then I'll wrap it up. I wanted to start with the sentiment from American Association of Individual Investors, right? The AAII, everybody knows this. And it came out today, and literally I just opened it now for the first time. I had a pretty busy day. I didn't have a time to watch the markets much, but as I was kind of preparing for this video, I'm like, let me just pull off I'm going through my kind of routine, watching between, I don't know, 30 and 40 charts at the end of each day to kind of see what behaved how, all the intercorrelations and everything that I like to watch. So the AAII, obviously, in terms of sentiment, is up there, along with the put call ratio and some other things. But look, we're spiking, and this is the most interesting thing I can see. I mean, these guys could not get out of their bearish stance for weeks and months, and now when we're at the highs, and the market is acting the way it is, in my view, because we'll take a look. But today there wasn't a good close. We really closed. We failed and we closed towards the lows of the day. I think that's a pretty decent sign of a market that's doesn't know what to do, and it's positioning in here. To increase the bullish positions, it's definitely telling. Look, maybe as we were kind of preparing for this larger sell-off, the bullish positioning cut, so maybe they were a bit right in here, and then but they stayed bearish for much longer than kind of what the market allowed, and literally just because this comes weekly, so 1, 2, 3, 4, 5, 6, 7, about 6, 7 weeks ago, right? So again, we're going back into October, November, when we started to kind of turn bullish, is exactly when the market starting to kind of act really weird, and we had a pretty big spike in this bullish. I mean, look at how high this green is. Now listen, there is, sure, we can look at the left of the chart and see a bunch of black and say, oh, this can stay. I mean, this is just starting, right? The bullish sentiment is just starting. It can stay longer for a long time. I think that's true, but don't forget, we are not coming after any type of serious correction. We've had a little bit of a drop in here, right, in November, and then since then, there was nothing significant. It's not like the sentiment gets reset after, a large decline, and then you begin a pretty big bull trend. Let's say you cross back above a 200-day moving average or a 40-week, and then you begin a new uptrend or a new bull market, and then you have a bunch of black. This one happens at the highs in here. I mean, I don't know. We'll see what happens with this, but I don't, I see this in my view as a bit of a negative. Now, if I go and take a look at the SPY and show you just on, where's the SPY? Okay, let's go to the hourly. I mean, look, right? This is the end of November. There's the big sell-off. And then we have the rally, pullback, rally, pullback, rally, pullback. Now, it is overlapping, and, it does look pretty, let's say, for some kind of a convergence structure, which we've touched on, and I'm not the only one that kind of shows this. Is it ending diagonal? If all of the legs would be like this one, I mean, you would have to count this, because remember, in ending diagonals, you're supposed to have 3 legs in each leg, right? 3 advance, 3 decline, 3 advance, 3 decline, 3 advance, 3 decline, and then, did I miss something? 3 advance, and then you roll over. So it's a 3, 3, 3, 3, 3, 3 formation, right? You would have to count this impulse leg kind of like that, and then here, I don't know. I mean, you would have to go almost like this, and like this. I don't know. This is the leg that's ugly. This is the one that's over here. So, and then I guess in the corrective phases, there's probably not a lot of complaints there. But this is kind of how he would be. And he would be a 1, a 2, right? A 3, a 4, and a 5. Then you sell off in the first leg, and this is the first corrective leg. As long as this high stays intact, you could say fine, is the end of this. Now remember, if these sell off, usually they come first here, but they come all the way to the origin of the diagonal, so they could sell off a lot. I'm not saying this is what's going on. It's something that we can see in the chart, and I want to explain it. The fact that they had a chance today to push it higher and then came and sold off, trying to close that opening gap, that's a bit interesting. So again, it's nothing to kind of scream for the short side, but I would definitely watch these levels up here, at about 686 and then 680, and see if they can start to take these down, and if they're doing so impulsively, and kind of how the market acts, especially tomorrow. It is Friday, so let's take a look at what I wanted to show you. Let's take a look. Let's go and take a look at Bitcoin. It's fine. There's no point to go through some of the other stuff. But look, in here we're looking at. Oh, I wanted to show you the dollar. I'll go back to that because that's also been climbing today, so that's interesting. Bitcoin, it's fine. I think it tried to accelerate, right? This was yesterday, and then today we kind of sold off. We're talking about how you're still on the weekly time frames, you're still fighting a pretty decent downtrend. Now the good news is that this move in here, this correction in here, if it is a correction, it's so large that you can't really attach it to anything that's been corrective so far, right? So that's kind of how I judge if that's how I judge if this correction, it's part of this decline. It's part of that structure. And the way that we thought about it, it was that until we've gotten, let's say, up here, that this move in here was probably some kind of a fourth wave. And this was going to be, like a 1, 2, 1, 2, 3, 4, and 5, 4, and 5. Oh, like I said yesterday, the market doesn't have to do what we're, dreaming that it was going to do. So it did something completely different. And I don't know in which bucket to put whatever it's happening in here. I talked about, and this is just kind of going back and thinking and about some of the videos I've made and what I've talked. At some point, we talked about this. Maybe, well, if this is a low, let's call it a wave 4 low, right? From whatever this corrective move. If that's a fourth wave low and this is a leading diagonal, we talked about the correction. I said I think the correction will come, towards 84,000 if it is, and then we'll see what happens from there. Nothing happened because it just went like this, and then it went kind of sideways, and it's like it still could be a triangle. It could still, kind of come down. No, instead it broke higher. Fine. We broke higher out of all of this. How do I exit these drawings? Like this, okay. And now, we made another push. So if this was a leading 1, 2, then one could argue, then that's a 1, 2, 3, 4, and 5. I got nothing against that. So let's just play this idea. 1, 2, 1, 2, 3, 4, and 5. I don't know if I have overlap here. I think we do, and that's a problem, because wave 4 cannot get into the territory of the wave 1, but you have a clean impulse. So I don't think it's a nice idea to count it like that. I don't think it's possible. It's legal. It's so that goes out the window. So now what? If it's not an impulse, and if this is a leading, then it's a 1 2 1 2 1 2, and then 3 4 and 5. I mean, we would have to actually explode and continue to go, and I don't think Bitcoin is acting that way. Nice volume, I like it. So you see, bottom line, what I'm trying to tell you is it's so messy in here, that I don't even want to bother counting it and coming up with all the scenarios, you know, towards the bullish side or towards the bearish side. What do I need to see? I need to see more. Let the chart draw itself out some more. And as it moves higher and it crosses above this 200-day moving average, things are probably going to start to look better. Then the pattern will start to form. And even if you're late, from catching a move from down here, at least there is something behind. There's a formation behind that starts to make sense. And then you have the wind behind your back. You're above the key moving averages. The 50 is just basically turning. It's just basically turning, right? It takes time. It's just turning a little bit, and then you're in an uptrend. You start to be in an uptrend. You start to be like it looked back here, right? All the way. Let me just move this camera, right? Like it looked back here when the price is above the 50 and it starts to move, and then the 50 offers resistance, support, and then it goes, right? So here we're just just at the very initial phases of it. Now, that's kind of on the bullish side. Now, on the bearish side, again, if this pattern is not anymore part of this pattern, that means that this pattern is on its own. So what could it be? Let's say that you calculate this as an impulse. Well, if this is a full impulse, then this move in here, it could be considered as against this impulse, right? So it's a wave, let's say a wave 1 or a wave A, and this whole thing in here as a wave B or a wave 2, which means that the next move should be down. Well, we don't know that, right? We don't know anything if it's going to pan out or not. But how do we know that the chances are that that's likely what's going to happen or what's about to happen? Well, we draw some couple of trend lines, we watch a couple of levels in here, and we wait for them to get tagged. And if the market turns from here and it starts to break and it starts to move down, now it's telling us, hey, what if that? And you're starting to have a correction. Plus, this needs to happen on a big value. Maybe the equity markets does the same. You know what I mean? So again, we're in the middle of this is nowhere land. This is nowhere land. Not for the bulls, not for the bears. I did say that watch the RSI here into the 60. I think on the weekly it's on the. Is it? No, it's barely at the 50. So, usually in downtrends, 50 RSI, like for example, this move up here, you go up into the 50 RSI and then you roll again. If you're in some kind of a bearish trend, in this one back here, the move was already high and it was about all the moving averages that the trend completed. This one, you're still below the moving averages. So very important to watch the RSI in here at 50. Okay, at 60 on the daily. And if there is, remember, you also have the idea of a head and shoulder in here. So if it fails, it should start failing fairly soon. Maybe it tries to go all the way up there, grab the liquidity, whatever, and then do that. We'll see if it continues up through it and it stabilizes and it looks better, and we're closing towards the top of each candle on the daily, on the weekly. Then we know, hey, maybe the low is in place and we've had a fourth wave and we're up we go, or maybe a second and up we go. But for right now, it's encouraging that it's pushing, but now it's the moment of decision fairly soon. So anyway, long video. I don't even know what I've talked about the whole thing, but thanks for watching. I'll see you next week. Today's Thursday, so there won't be a video tomorrow. I don't think I'm going to do one on Saturday. I'm going to watch some soccer, some football, and some other stuff. Try to have a good time. All right. Bye, guys.